Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of Ares Acquisition Corporation 2, a blank check company that's on the clock to find a business to merge with or risk giving back all its cash. Will they find a match, or will investors get their money back? Let's decode their latest annual report and see what's cooking. First things first, this is a Form 10-K, which means it's the big annual report. It's got all the details about how the company performed over the last year, what risks they're facing, and who's running the show. This report is basically their entire business operation, but hey, we're here to make sense of it, so let's get going. This report is specifically for the year that ended December 31, 2024. That's the period we'll be focusing on. Now, before we even dig in, let's get a feel for how much this company is supposedly worth. The report says that on June 30, 2024, the total value of the stock held by people not directly connected to the company was about $533.5 million. That's a good chunk of change, and something to keep in mind as we go forward. The report describes Ares Acquisition Corporation 2 as a blank check company. That means they don't really do anything yet. They're just holding money, hoping to buy or merge with a real business. Ares is looking for a business that's different, sustainable, has good growth potential, and can benefit from being a public company. And Ares connections, they have about a year left to find one, unless they extend the deadline. Let's get into the nitty-gritty of what Ares is looking for. They want a business with a strong, sustainable model and attractive growth prospects. They need to be large enough to handle being a public company. They also want a company that can benefit from Ares' relationships and expertise. While they may change their focus, this is a good overview of their intended targets, so you know they probably aren't going to go after something crazy like an oil or gas business. Here are some interesting requirements. First, any business they acquire has to be worth at least 80% of the money they have in their trust account. Second, they can't merge with another blank check company. It's like they can't just keep passing the buck. They have to actually find a real business. Now, for some potential conflicts of interest. Ares manages a lot of investment funds, and those funds might be interested in the same companies that Ares Acquisition Corporation 2 is looking at. Also, some of the company's leaders have other jobs and responsibilities, so they might have to juggle different priorities. Here's a big risk. If and when they do merge, they'll be completely dependent on that one single business. Unlike bigger companies that have their hands in all sorts of things, this company's success will be tied to one particular company and market. If that industry hits a rough patch, this company is in trouble. Here's a twist that might upset some investors. Ares might not even ask shareholders to vote on the deal. If the deal is structured a certain way, they can just go ahead and do it. So you might not get a say in the most important decision this company makes. And yes, this is a shell company, as in mostly just empty, as defined by the Exchange Act. That's pretty standard for these types of setups. All right, let's brace ourselves. It's time to talk about risks. These are things that could really mess with the company's plans. They range from difficulties in finding a good target to potential conflicts of interest, and even whether shareholders get a vote. One key risk, they're trying to extend the deadline to complete a deal. This means finding a suitable business is proving harder than expected, and it's a clock that keeps ticking. If the shareholders approve the extension, then they get some more time. If not, it's liquidation time. Here's another potential landmine. Even though Ares is putting money into a trust, that money might not be completely safe from lawsuits. If someone sues them, that could reduce the amount of money available to shareholders when they finally do a deal or decide to shut down. And of course, no company is immune to cyber attacks. A security breach could disrupt their operations, compromise sensitive information, and damage their reputation. Let's look at some hard numbers, the financial results. Since Ares hasn't actually acquired a business yet, there isn't a ton to go over. It's mostly just how they're managing their cash while looking for a target. For 2024, the company made a net income of about $26 million. Now that looks good, but that is mainly from interest earned on the investments held in their trust account. It is offset by about $1.8 million in general and administrative costs. The lesson here is that most of the money by far is made from the money parked safely while the company doesn't really do anything. Here's the money shot as of December 31, 2024. They've got total assets of about $551.9 million. A huge part of that is the $551, even though the clock is ticking. Now let's talk about who's running the show. All these people are also deeply involved with Ares management, which brings both expertise and, as we mentioned earlier, potential conflicts of interest. David Kaplan is the CEO and co-chairman. We also see Michael Arroyetti as a co-chairman, along with others. The financial expertise and deep industry relationships are supposed to guide the ship. The interesting part to me is, will this be a positive thing, or will these individuals have an impact on a profitable opportunity? The board has an audit committee, which includes Brad Coleman, David Hertz, and Felicia Thornton, all of whom are considered independent. This audit committee keeps an eye on things to make sure the numbers are legit. Here's how much they're paying their accountants. Audit fees from Witham Smith Blass Brown PC totaled about $104,520. Not a ton of money, but definitely a required expense. So what's my take on all of this? Ares Acquisition Corporation 2 is in a tough spot. They're sitting on a ton of cash. With the clock ticking, the pressure is on to find a suitable business to combine with. The company has some inherent strengths that it's part of Ares' management world, which brings relationships and expertise. Now, the potential conflicts of interest, as always, are something to watch, but it also brings deep financial connections. And the biggest risk is that they can't find a deal and all of this effort is wasted. While the income from the trust account looks good, at the end of the day, it must be deployed in a good or it's worth nothing. Thanks for watching. If you enjoyed, please subscribe, like, and comment.